that purpose that is there within every mutual organisation really is the golden thread that almost runs throughout the mutual sector and helps it thrive.
Welcome, Will. We're delighted to have you here today.
Thank you very much.
Will Carroll, CEO of Monmouthshire, is joining me here to talk about Monmouthshire's modernisation journey, about working with Woodhurst and about the sector. So really excited to get into it today with you, Will. Do you mind just giving me a bit of an introduction to who you are in Monmouthshire Building Society, please?
Yeah, thanks, Ben. Like you say, I'm Will Carroll, Chief Executive of Monmouthshire Building Society. I've been Chief Exec at the Society since 2016 now, but I've been at the Society a much longer time. I've been at the Society for 20 years, coming up through the finance function before becoming CEO, as I said, in 2016. My role at the Society is I run the day-to-day activities of the business, and I'm responsible for the implementation of the Society's strategy. As you can imagine, that involves liaising with a large amount of stakeholders, colleagues, members, the board, the regulator, suppliers. It's a great job. It varies day to day. But,
what's your favourite thing about working at Monmouthshire?
In my time, oh gosh, it has to be the people. I think we've got a great team of people at the organisation who are sort of committed to the Society and pushing the Society forward and, as I say, implementing our strategy, our vision of becoming an innovative, exciting, modern mutual, and all of that entails. So I think we've got a great culture at the organisation, which is built around our values, community, personal service, quality, and dynamism. So I think they all hold dear to us and in what we do, and really does help us drive towards getting the right outcomes for our members.
Nice. And this sort of role of the mutual sector, I think it's getting a lot more attention now with the new government, and there's been some big moves. So the mutual sector is growing with Co-op joining Coventry and Virgin Money joining Nationwide. To you, and you've been in the sector now 20 plus years, what do you think that really is the value that the mutual sector brings to the country today and to the communities?
Well, I think the mutual sector has always brought great value to the financial services industry and other industries alike. So I think the mutual business model provides competition to other business models. Absence of shareholders and being a member-owned organisations means that mutual building societies can focus on the long term for its members, look at products and propositions that really do benefit our members, benefit our colleagues, benefit our communities, and that really helps engage people, engage our business, helps differentiate us as a business. So that purpose that is there within every mutual organisation really is the golden thread that almost runs throughout the mutual sector and helps it thrive. And like you say, Ben, it's a great time to be a building society at the moment. There is support from the new government. Like you said, there's been some great strides in doubling the size of the mutual sector over the last year with the Nationwide and Virgin Money, and more recently Coventry and the Co-op coming together. That's really given some great publicity to the sector, and hopefully we'll see more to come over the coming years.
Nice. And so you touched on earlier that, recently you've been at the centre of starting a modernisation. Can you bring that to life for me and tell me, how did you get to the point of deciding that you wanted to embark on that modernisation, and start to tell me more about what that modernisation sort of looks like in your mind?
Yeah, I think since I've become CEO at the Society, we've been modernising all the way through. So, for example, we've rebranded the organisation to give it a more modern look and feel. We've looked at all of our premises, our branches, our colleague workplaces, introducing a new administration centre in Cardiff above our flagship branch. So providing great space to work for our colleagues. As I say, looking more of a modern building society. I think one of the misconceptions, I think, of people is that building societies are a little bit staid, a little bit old-fashioned, and that's something I think we need to dispel over the coming months. So we've looked at modernising our systems, but we've been on a growth trajectory as an organisation over the last few years. But I think it came, with some macroeconomic changes, came the realisation that we can continue to grow as an organisation, but we're stretching our people and we're stretching our systems. So if we wanted to continue to grow at the same rate, we were at risk of breaking both if we didn't do something. So the organisation has embarked upon a new strategy, sustainability through modernisation, whereby we're going to look at all of our systems, transform our business so that we can really modernise systems and provide those services, efficiencies, member benefits, colleague benefits that we all crave.
Yeah, and when we say sustainable modernisation, do we really mean the ability to be able to offer these great financial products and offer more of them in a way that the cost base doesn't grow, or are we talking more around the sustainable products themselves in your mind?
I think it's a bit of both. A sustainable organisation, we have to make enough money to run as an organisation. So sustainable growth is lending at the right margins in order to cover our costs, make sufficient profits to grow into the future. Yeah. I think with advances in digital AI technology, we are falling behind slightly in terms of having aged systems, inefficient processes, more people running those inefficient processes to run our business. So we need to become more efficient, which will help our cost base management into the future as we look to grow and scale our business more efficiently and effectively.
Yeah. Well, what are some of the things that you hope that a broker or a member will get when Monmouthshire is almost at the end of this next phase of its modernisation? Are there some things that stand out in your mind that will be different for a broker or for a member?
Oh, absolutely. I think at the moment, just to explain the broker piece, we're heavily intermediated. Our lending, 95% of our lending goes through our broker network, and the systems that our brokers use at the moment are the major cause of issues in getting business through the society. So once the application is in, the service is great and no issues, but actually getting the application into the system causes a problem. So by transforming our loans origination system, we're looking to provide a much slicker service, a much better user experience for our brokers in order to do business with the society, which will, that ease of transacting with us will help generate future business alongside the great product propositions that we already provide and the service that we provide. So being able to run more business through our systems is clearly going to be a benefit for us, a benefit for our brokers into the future. And then the same goes for our members. I think it's almost a hygiene factor now that members demand services on tap when they want and to be able to use their channel of choice. Yeah. So by improving that user experience, offering an app, we've got a mobile app launching very, very soon, which will take us a huge step forward in terms of how we transact with our membership, open us up to a much wider demographic across the country, and really push our business forward. So yeah, I think it's that user experience, the slick experience that members demand now, as opposed to paper-based application forms, wet signatures, all of those things that really are not conducive to modern day business and won't help us grow sustainably in the future.
That makes a lot of sense. And just to touch on data as part of that, with your central to your purpose being getting more people into homes, do you think that there are potentially people out there that Monmouthshire could be helping get into a home with a mortgage if it could harness more of the data that was available in the lending process.
Oh, absolutely. I think data is key to everything. So understanding our members, utilizing our data more effectively than we do today is key to the future success of the business. So a core part of our transformation strategy and a core project within our transformation program is almost cleansing that data, understanding that data, how we can utilize it best, and having almost one source of the truth to identify, well, everything really, from the back end of the business to the front end. But yes, identifying our customer needs and wants will help us design better product propositions for our members on both sides of the balance sheet, for both our people who want to buy a home and people who want to save with us.
Yeah. And what advice would you have to people, sitting in leadership teams? Because data has typically been a topic that everyone knows it's important, but it's hard to get people excited about at that exco and board level. How have you found that at Monmouthshire?
Yeah, and you count me in that, Ben. Data is definitely not my speciality, but given the rise in AI, digital, and technology, if your data's not right, then we're starting from a false position, if you like, a bad place. So I think everybody is now on board in terms of understanding the need to develop our data proposition, and our society's data, in order to reap the benefits in the future. So while it's not the most exciting topic, it's probably one of the most important, I think, to get a successful transformation. And if you're getting buy-in for modernization for the business, I think it's almost comes alongside that as a given that you have to get your data right. So we've embarked upon our data project now with the support of our transformation partners, with a view to pushing that forward and having the right data to run our business successfully in the future.
Are there any things that you can picture in the future through the modernisation that you can see really impacting the colleagues? Some examples of maybe where they're having to go above and beyond today because of the restrictions of the systems and processes that you sort of gets you excited about what it might like be for a colleague.
Yeah, absolutely. I think, if we're going through a transformation process, the jobs that our colleagues are doing today are going to be very different to the jobs that they're doing tomorrow. So I think we've mentioned the inefficiencies that we run as a business, and lots of manual touch points, whether that's on a payment process or whether that's on a loan application and sending out for documents and scanning documents and putting them into a file. Loads of simple things really that you think, yeah, that should just happen automatically, but doesn't, because we've almost accepted it with the systems that we've got and built on the processes, or added another colleague to the business when business volumes get high. So almost taking those inefficiencies away, having links through your data, through the power of digital technology to push mortgage applications, savings applications through, will take away a lot of those inefficiencies, a lot of those manual touch points, and that will really help our colleague of the future to have more time to add value, to really offer that better service to our members. So yeah, I think the business of today and sort of the organizational design and target operating model of today is going to be very different to where we end up in a couple of years' time.
Definitely. We've seen a lot of businesses when that admin goes, because the technology's improved and the process is more efficient, colleagues just have more time to do the high value tasks, which at the Monmouthshire, it's time spending looking at those specialist lending cases where they've probably been turned down by a bank, and you might be able to help them.
Yeah, absolutely. With the loans origination process, if you can go straight through on the lower risk residential lending, which we can't at the moment. So that already puts us at a massive disadvantage to those who can. Like you say, the additional time focusing on those lending propositions that really differentiate us as an organisation. So your holiday let, your higher loan to value mortgage cases, commercial lending, that really helps us focus. And as you say, we'll have more time to focus on that lending.
Yeah.
Hopefully bring the lower LTV lending through, and getting that balance right will, as we say, help us grow scalably and sustainably into the future.
Nice. Another headline today was Lloyds Bank closing another 140 branches. It's got a lot of press, hasn't it, that the retail banks are closing branches, but the mutual sector is either opening or continuing to keep their current branches open. What at Monmouthshire, what do you see as the role of the branch and how it will evolve with the addition of all this exciting new digital technology? How do you see that the branch evolving?
Yeah, so branches for us are part of our purpose. So we've spoken about being purpose-led, supporting our communities. So Monmouthshire has got 11 branches across its core region and 13 agencies. So we really see those branches as supporting our communities. We don't see them as profit centres. I think that's a big difference. It's part, it's part of the fabric of the organisation. It differentiates us. So there is a huge place for the branch at Monmouthshire, and extending the branch network, but not necessarily the bricks and mortar branch. I think there needs to be innovation in how we look at extending our branch network. I think we saw during the COVID period, we kept our branches open, but maybe not on a full-time basis. We're looking at, when do our members transact with us, and can we be more innovative in how we operate those branches, but possibly increase the reach of our branches and our branch networks throughout the communities in which we operate. So yes, the role of a branch will be different. If you're offering digital services, we need to be able to support our members who are coming into branch and want that face-to-face service to understand those digital services. And like we say, it's about having channel of choice. So branches for us are really part of the future of banking. I think the big banks, I can understand why they're pulling away from the town centres. They've got the big old buildings, very, very high cost to run, but there's definitely a way of doing that differently. We're seeing innovation through banking hubs. Monmouthshire's just launched Community Connect branch in Abergavenny, whereby we lost an agency recently, and we were thinking of ways in which we could bring that branch presence back to the town, and we've worked in conjunction with the council. We have a room in the market. It's not, it's not high end, but we've got all the kit there to undertake all our banking needs, provide a service to our members, and it's gone down incredibly well. So having those sort of smaller hubs alongside our more established branch network, I think is definitely something we'll look at moving forward.
That's really interesting. And do you think what's happening in maybe some other European countries where those banks that really want to keep the branch network open are finding ways to make it more cost effective by, for example, having a receptionist that's someone with a camera on a screen, so that receptionist can be serving multiple branches at the same time, and having a mortgage advisor that can drop in to the branch room? Do you think that works, or is that losing the critical sort of personal touch that someone gets by actually going into the branch and speaking to a person in real life?
Yeah, it's really interesting, isn't it? It's an innovative way of keeping a presence on the high street. So ultimately, the member, the customer, will come in and see the person they want to see.
True.
Eventually, I'm not sure whether it's for the Monmouthshire at the moment in terms, but if it's a cost-effective way for people to keep branches open, then I think it should be looked at. It should be considered.
Better than closing the branch.
Exactly. So it's almost a hybrid of the two, isn't it? So if you can centralize some of the service and offer out, but if a branch just becomes a virtual centre, and you can walk into any high street bank branch now and get pointed towards a computer, I think that almost defeats the object of the branch. I think the face-to-face service is important. It's what people want. It's what people value. So, I'm on the fence on that one, Ben.
Yeah, And I suspect as part of your modernisation, a key part of that would be someone could go into a Monmouthshire branch or a hub and begin a financial product journey, opening a new savings product. They might not finish it in the branch, and then they can pick it up online and they can switch between the channels. And that's something that I think people that modernised maybe 10, 15 years ago, that wasn't an option, and now it is. So do you think that will be an important part to the modernisation with the channel of choice and having that seamless switch between the
Yeah,
channel?
well, omni-channel banking is challenging in
Yeah.
terms of that sort of journey that we're on. So we are offering a multi-channel approach at the moment. I think we need to see how those needs and demands of our members move forward. Hopefully, for us, I'd like our members to be able to complete the transaction
Yeah.
through the channel that they want to complete it with, rather than switching between, because that does add some complications and probably quite a lot of cost for us. So
Yeah.
in terms of our transformation journey looking forward, we are looking at that multi-channel approach as opposed to the omni-channel, but I'm sure that will evolve in the future, and it could become a hygiene factor further down the line.
But that's a really good point, isn't it? We've got to accept that modernisation always has to be done to a budget, and it's easy to get carried away, and some have, and they've overspent their budgets and not delivered much. So it's good to hear that it's sort of weighing up those member benefits versus just pushing for the latest in the technology. You actually have to work
Yeah,
that through.
absolutely. I think we've said, I don't know how many times I've said sustainably in this interview so far, but you know, building societies are restricted in their capital growth. So our capital base is our profitability over the last 150 years or so that we've been in business. And we are subject to capital constraints. I think that is a massive risk to the sector at the moment, if we're looking at the opportunities which we have in terms of growing. But the cost of technology, the pace of adoption, making the right choice is incredibly important, because yes, we are subject to budgetary constraints. We've got other constraints that we have to work towards. So yeah, tightening our belts and almost getting it right, picking those things that our members want is incredibly important.
Yeah.
We don't just want to be good enough. We do want to be better. But let's be better at those things that we select, as opposed to everything.
That's key. And I think people will kill me if I don't ask this question of you, but can you give me some views on the general trends in the mortgage and savings market that you see, that not necessarily Monmouthshire specific, but there's a lot going on in the mortgage and savings and markets, and I know you know a lot about it, so it'd be great just to hear your thoughts on some of those trends.
Yeah, really interesting. I think there's so many macroeconomic pressures at the moment that are on the sector in general. So high interest rates have impacted our borrowing members, particularly over the last 2 years, as we've come out of a period of incredibly low interest rates. So that's affecting affordability for borrowers, that's affecting lenders, accepting lending. So we need to adapt to ensure that we can still offer great lending products to our members. The ESG constraints on the business, we're seeing a lot of different types of mortgages now being offered. The green mortgages, so more money being offered if your house is C or above, or B or above, and the benefits, and we've looked at that as well. We've looked at supporting that journey for our members. But if you look at our existing housing stock on the green and the green mortgages, they're almost at odds, because our core business is based in Wales, which is rows of terrace houses in the valleys, and how do you make those houses green? So that's a challenge that we have to adapt to. I think definitely the biggest challenge, though, is the digital and AI, and keeping up with that technology, and those smaller organisations not having the capital base to invest and grow their business effectively. So going back to what we were saying about picking the right choices and picking the right partners to move forward is incredibly important. So I think the main challenges in the mortgage sector, high interest rates, digital and AI, and the evolution of ESG and how that moves forward in the coming years. On the savings side, again, digital, obtaining a savings account is easy now. We've spoken about ease of transaction, ease of moving your money. Open finance is available. You can shift money between accounts in seconds. You can open accounts in seconds. So we need to be up there. We need to be offering those services to our members to support that. So again, high interest rates has seen the money move out of low interest rate bearing accounts to those higher interest rate bearing accounts. And we've got the introduction of platforms. I know they've been around for a few years now, but have been incredibly successful in shifting money around. So that almost introduces margin pressure, because you're going to have higher rates to attract those customers to invest funds in our organisation, and that's where we almost become a commodity in the sense that the members who are operating through savings intermediaries don't really care where their money's coming from. I think they look for the FSCS limit and they look for the rate, and then they're willing to move their money. So for us, we need to be in that channel to raise funds. We need to be able to compete in order to grow. But in order to differentiate ourselves as a business, then I think that's when we come back to our region and our communities.
Yeah, that's a really good point. And you've touched on it earlier, but obviously the ease of opening a savings account is crucial especially for those people that are in that journey of the digital one and they're looking to deposit the funds straight away. Do you think innovation around things like, we've seen it with credit unions and how people can save straight from their paycheck into their account? Do you think innovation like that and then embedding that in a more digital way is going to be important to Monmouthshire's fight for those savings as the market increasingly gets more competitive?
It's not something we are looking to move straight into. I think the sort of current account space we will leave to the high street banks. It's something we've meddled in the past and eventually pulled out of for different reasons. I think now having the ability to have a savings account that you can send your money back to instantly, whether that's through open finance or to your current account, and then manage your money through your current account is a very, very good option for us. I think if you've got the facility to transact quickly, send your money back to your current account, it's lower risk for the organisation, it's lower risk for the building society in the first place. We can focus on offering the best savings accounts that are available to our members and just push that saving side of the business. I think that everyday banking proposition comes with a great deal of cost, a great deal of skill and expertise required to run that. And at the end of the day, our core of our purpose, we're a savings and mortgage institution. So for us, it's attracting those savings balances in the best way that we possibly can.
Yeah, and you mentioned open finance. There's a bit of a debate going on in the mutual sector. Some say that open finance is a threat, that it means that savings are going to flee the building societies. Others say that it's an opportunity and want to get on top of. Where do you stand on that debate in the sector?
I think it's an opportunity. It's an opportunity and a threat, isn't it? At the end of the day. So I suppose if you're not in it, then it's more of a threat because you can lose more of your savings balances. It comes back to the whole ease of transacting, almost hygiene factors for members. So I think open finance has got a huge amount of benefits in terms of transactional benefits and colleague ease in terms of how you move things forward. So I think it does open opportunities for us as an organisation. It makes us look at things differently. It'll challenge how we operate as a business. But yeah, I think we've already spoken about how the savings market is commoditized to a large degree now. So if we're not in that, then we could find ourselves lagging well behind. So I think it's definitely something that we need to adopt and implement in the future.
That's it. I think that's where I stand on it as well. If you try not to be part of it, it probably will become an issue. But if you're part of it, then it will be serving you in a way that's positive. Moving on to technology partners and picking them. Yeah, I think you touched on it earlier, and some of what you were saying. But in your mind, what makes a good partner for that sustainable modernisation, one that, how do you get confidence that that core technology partner is going to be able to help you deliver that over the years?
Yeah, it's a really it's a really good question. It's such an important relationship to have. So I think as with everything, there has to be sort of mutual benefit. I think is incredibly important to the partners. Open communication, understanding. I think those partners need to be culturally aligned as well to the organization in order to implement those services and offer those services effectively into the future. So I think that communication is probably the biggest thing for me in terms of understanding what we want as an organization, what we're about, what we're looking to drive towards, which really then supports that implementation of software, whatever that tech may be. And almost, I suppose there's so many fintechs suppliers out there now. There's a raft of choice for us. So we need to be able to pick through that to understand what are the key benefits that we will derive from each supplier. So there's a huge amount of due diligence required. I think that's for some suppliers that's a challenge because the newer fintechs have got great innovative ideas, but they haven't got a history. So sometimes there's a risk involved in taking on that supplier because it might not last as long as you'd expect. So it's a bit of a minefield. But I think in general, if you've got a good procurement process in the organization, if you've got good support, you understand what you're getting into, it's in line with your IT strategy. You're not just going, the scattergun approach. You think this is a great idea, so we'll bring that in for this area of the business, and it doesn't really align to your strategy. I think you can end up building a lot of cost into the business. So communication, mutual benefit, and trust would be the three key things for a supplier.
Nice summary. And obviously being here today, we couldn't not talk about Woodhurst. So we've been partnered now for over a year. I'll start with really keen to hear your thoughts around the beginning of that relationship before you'd started working with us. Can you tell me a bit more about how you came to a decision to even want to work with Woodhurst as a partner on your modernisation?
Yeah, so we've spoken about the journey on how we're moving into our new strategy and transformation, and the executive and the board recognizing that transformation by its very nature is temporary, and having the right skills and expertise to implement a transformation would be absolutely key to our business moving forward. But then, the other question then is, do you employ that resource into the business, or do you look outside of the business for a supplier who specializes in that area of business? And I think we quickly came to the conclusion that we needed a transformation partner with experience of the industry, experience of transformation, previous transformations, who knows the various steps of going through transformation. And then that led us to our selection process. So we've been in conversation with you guys through various different channels and reports, and seeing you guys in the industry. So when it came to the RFP and talking through who we would use as a partner, I think Woodhurst were on the list, invited. And again, talking about suppliers, communication, trust, mutual benefit, I think that's worked really well between the two partners.
Definitely.
So we selected you, and you've been with us from the day we started our transformation, almost, in terms of identifying those requirements. A lot of those tech decisions that we've been talking about today, to moving through the RFP process, which is still ongoing, and then the support in implementation, which is due to come. So I think it's been a great partnership in over the year that we've worked with you. But definitely having the partner has helped us move through the transformation quicker. And I suppose we're in the midst of it at the moment, and we've got the big implementation phase to come. But I suppose without that partner and looking for the internal resource, that adds time, it adds cost, which is a huge premium to us at the moment. So we want to get back to growing sustainably, and so if we can get our transformation through as quickly but safely, then that's a benefit to us as an organisation, certainly of greater benefit to our members, and yeah, will help us progress, I think, back to business as usual quicker than we would if we were without a partner.
Yeah, that's so important, isn't it? And I think we're both aligned on transformation, a huge undertaking, but it mustn't interrupt BAU too much. And I think that's the sort of mutual goal we have, isn't it, around doing it in a way that it's not too disruptive, but it's delivering this change at pace.
Yeah, absolutely. I think our members don't care that we're going through transformation. No. Our members who are with us still demand a service. So if we just stopped business as usual, then what would the point of transformation be? Because there wouldn't be any customers at the end of it. So no. That has been critical for us as a business, for me as CEO, that we keep our business as usual safe while we run through transformation. Yeah. Transformation is a key strand to our strategy, but business as usual is critical.
Absolutely. And any observations working with the Woodhurst consultants from you or the team that you can share?
Yeah, I think it's been a great collaboration. I think Woodhurst has got great people, really engaged with our business, really engaged with the sector. I think that shines through. Great rapport with our colleagues in implementing, your years of experience, but passing that on to our colleagues as well. So that there is a degree of understanding of what we're doing. So when Woodhurst do move on to the next building society, we still have that knowledge in the business. But I think it's at all levels. I think it's important to note, you've reported to board, our transformation oversight committee, executive committee, and then working on the day-to-day basis, identifying quick wins throughout the colleague base. So I think throughout the organisation, Woodhurst have touched at various points. And I think each has been successful. I suppose we've had certain time delays in various bits and pieces, but well managed, well communicated and resolved so that we can move on to the next. So yeah, from our perspective, I think it's been a very, very successful relationship, and one that we want to continue to nurture now through the transformation, so that the transformation is a success.
Brilliant. Thank you very much. And let's move on to, there are a lot of people that are in financial services working at lenders, whether it be building societies or elsewhere, and some of them want to be CEO. So I think having got there and being a CEO yourself, I think it's always great for people. I know a lot of people are interested to hear, advice around, you talked a bit at the start about what it is to be a CEO, but how do you get there? What's your thoughts on general career advice in the sector and beyond?
Well, I suppose we all get to our roles in different ways. So like I said at the start, I've been at Monmouthshire Building Society for 20 years now. Trained as a chartered accountant. I worked for a Big Four firm before joining the Monmouthshire. Monmouthshire was only supposed to be a sort of stopgap before I found another job somewhere. I thought, because when we were moving back to South Wales, Newport was a little bit too far away from Neath, where I lived. But as soon as you come into the industry and see what it has to offer and the breadth of skills and expertise that's involved in running a financial services firm, you sort of get hooked. Yeah. And I think that's one of the key for me in terms of my progression at the society. I think a healthy curiosity. Even though I was finance director, I've run customer services, which is now our savings centre. I've run compliance. Everybody laughs at me. I was society secretary for a while. I've run arrears. So I suppose I've covered all areas of the business, and just like to understand what goes on, what makes this department tick, how does that impact the overall society. So that curiosity for me was key, a willingness to push myself forward in order to learn and develop in those roles. But I was also fortunate enough as part of my leadership path to undertake the MSc, the Building Society MSc at Loughborough University. That was a great experience for me, particularly because I've only been at the one organisation, to give me that external breadth to understand what people are doing in other organisations and how they're developing. And I think that sort of classroom development and academic study takes you out of the day-to-day, but then you combine that with the practical experience, and I think that almost gets you ready to become a CEO. But then in saying that, I became CEO sooner than I anticipated, which is a story for another day. So when I became CEO, I wasn't just ready. I wasn't ready just to step into the role. So there was a lot of learning on the job. But I actually think that was probably the best thing for me, because you learn as you go. You've got to learn from your mistakes. You know what's good, you know what's bad, and you progress and develop over the years. So I absolutely love it. I think it's a great job. It's so wide and varied. You're dealing with people. I love dealing with people. I love going out, talking to different people, understanding what we can do. I love being the ambassador for the society, selling our wares and going out and telling people what Monmouthshire is all about, but also bringing people into the Monmouthshire as well. So I think it's a brilliant role. It does challenging from time to time, but I think every job has its challenges.
Definitely. That was fascinating. And could you summarise your advice to aspiring leaders in a few words, do you think?
Yeah. Curiosity, I think, is key. I think you can come up through a discipline and you can almost pigeonhole yourself. So you do need to understand that breadth. But I also think to be an effective leader, you've got to have trust in your team. You can't do it all. It's the old cliche, employ people who are better than you in doing it. And I think that really holds firm for us. So having a strong team makes you become a far more effective leader and understand the business that you're running. And I think I'm lucky at the moment. So I think I've got a great team. We're really, pushing the business forward, looking to drive the society to where it wants to be.
Brilliant. So a few final questions. One sentence on the future of the building society sector.
The future's bright.
Nice. What about advice to a younger Will Carroll? What would you say if you were meeting Will Carroll 20 years ago?
Don't offer to become society secretary, I think would be one of them. And I think, going back to what I just said, I think accept help, understand that you can't do it all. There are people around you who are better at doing some things than you are. That's just natural. And I think understanding that at an early age could be of a huge benefit, because you won't take as much on, you won't burden yourself in ways, and I think that would help you develop quicker.
Yeah. No, you said people earlier, I think, but I'm not going to allow you to say that again in this answer. What's your favourite thing about Monmouthshire Building Society?
I'm not allowed to say people. It's definitely the people. So there's lots of favourite things. I think the role in general, I think it's a great business. It's a great business model. It's 155 years old.
It works.
It's satisfying. The service you get, the feedback that you get from members is incredibly satisfying because of the service that you give. And that does all come from the people. I'm going to ignore you and say that I can give you the same answer. It does all come from the people. It does all come from the culture in the organisation and that desire to succeed. So without the people, we wouldn't be anything. So I think as an organisation, we're operating in a purpose-led business, a member-led business that really does support our communities. And, if you're looking for job satisfaction, I think, definitely look at a mutual, because it offers great opportunity within that purpose-led environment.
And what would you say to other building society or lender leadership teams, CEOs, about going up the risk curve? Because I know we've talked about it before, about a need sometimes to go up it. But what's your how do you get? I don't know if comfortable is the right word, but how do you know you're going up the risk curve in the right way and not going too far?
Yeah, and that's the challenge for everybody, isn't it?
Yeah.
I think in order for us to succeed as a business, retaining the status quo is the wrong thing. We've spoken about transformation. That's key to us. If we retained our status quo, then I don't think we would be sustainable as a business.
No.
So whether it's lending, whether it's tech transformation, whether it's savings, people, if you're not looking to take the next risk, then I think the organisation will become stale. And it goes without saying that you have to manage the risk. You have to understand the risk that you're taking to move it forward. But if you're not willing to take it in the first place, I think then your business model becomes less sustainable. So you and I spoke about the lending market. I think if you look at building societies in general at the moment and the arrears statistics, they're incredibly low, and it's a point in the cycle. But it's also reflecting of the lending that we've done. So I think there is opportunity there to push ourselves up the risk curve, or the credit risk curve, in terms of lending. And it's just identifying that. It's understanding the data that we hold, understanding the requirements that people want in order to offer those propositions that will sell, that will ultimately make the building society money in order to grow its core, support its communities, and push forward in line with purpose. So summarising that, I think, yes, we need to take risk. We need to understand it, or else we will remain static and ultimately decline.
Somewhat related, and coming back to an earlier point, we talked about, the plethora of fintechs out there, the challenge that they have to demonstrate that they've succeeded elsewhere, the way that they stack up in due diligence. Ultimately, you could list a number of other things, but I think it's well regarded that it's almost like taking a punt. There's a risk. They may not be around. However, some have harnessed that opportunity to be the first customer of that fintech. Have you had any experiences like that in Monmouthshire, whether it's a fintech or another supplier, where you feel like you're taking a bit more of a going into uncharted territory almost? If you haven't, do you think you might, and what would be your thoughts on that?
Yeah, absolutely. And again, it comes back to what we want as an organisation. We have looked at, innovative suppliers that are out there in order to take risk, and we've moved forward. We've moved forward in terms of technology that's maybe not advanced in the sector, but is advanced elsewhere. So it's slightly different in that regard. It's a slightly different risk. So I'm thinking of robotics and robotics in the cloud, which is what we are still using to support inefficient processes and moving forward. So we were one of the first in looking at that in the sector. But in terms of those startup businesses that are out there, I think we'd be crazy not to look at it if it's in line with our IT strategy and technology. I think for me, it's the understanding the risk again. So if you're going to take a risk and it's a new supplier, but they've got a great piece of innovative technology that will drive our business forward, then you've got to understand that risk, understand why you're taking it, and look at the mitigants to support it. So like anything for me, I think, yes, we would take it if that opportunity is there. And I think with the rise in fintech, and South Wales has got a huge fintech community now.
You're part of FinTech Wales, aren't
you?
Yes,
we're a member, and it's great to see some of the offerings that are out there. So we will definitely be a consumer. We are a consumer of fintechs, but probably more established fintechs. In many ways. But yeah, if those opportunities come along to work with newer innovation and younger companies, then why wouldn't we?
Yeah. And do you think it's important for them to correctly frame a sort of proof of concept that they could run at Monmouthshire, to put some guardrails around it, and you'd be prepared perhaps to pay for it, but keep the outcomes clear and almost protect it from the core operations of, let's say, savings and lending? Do you think that's a good way to go about it, like some others have, or do you think that can be a bit too much of a theoretical exercise?
No, I think supporting a proposition is a great way to go about business. Slightly different
Mm.
to developing your own software for your own needs, because that can become
A different business.
a different business, and we're not an IT company.
No.
But if we can support the development of software that we need as an organization and that others will need in the market, then again, if it's within our risk appetite and something we have the resource and time to push towards, then yeah, I would support that.
Yeah. Another question I've got for you. So, every building society get together I'm involved at, we were at one last week together. There's this question that normally comes up of we should collaborate more together as a sector. We're 43 building societies. We're often not fighting over the same business. Sometimes we are, but generally as a sector, there are things we could come together on. But I think I see there's a great desire, but then I know everyone gets back to their respective building societies, they're busy, and it's difficult to find that extra time. Do you think that the industry the building society sector needs to align on something to collaborate on, and then it will start collaborating? And if so, have you got any thoughts on what that might be? Is that intergenerational wealth transfer? Is it, or yeah? Do you have any thoughts on that?
Yeah, I do actually. I think collaboration in the sector, I don't think it's inevitable,
Mm.
but I think it could definitely happen. And I think through technology, I think we've spoken, the cost of technology and the size of some of the smaller mutuals,
Mm.
including ourselves, in terms of implementing technological change in the current environment, could lead to collaboration.
Mm.
And I think, at the moment, I don't know how many of the 42 building societies are out there transforming,
Mm.
but I would say there's a good
More than half of them.
75%,
Yeah, 70%.
doing some sort of transformation of some part of their software journey. So I don't know how many millions of pounds that's putting into the software companies' pockets, but if we came together as a sector and could, you could have one instance of the software that all the brands could run off,
Yeah.
then that sort of shared service agreement makes a lot of sense.
Mm.
But then, like you say, we all come back to our respective building societies. We've all got our own individual strategies and different sort of directions in which we're going. So it hasn't quite seemed to happen within the UK. I went to the US last year as part of the BSA study tour. And one thing that we definitely came back with was that the mutual banks in the US definitely collaborate better than the building societies in the UK. And that's something, again, in terms of looking at innovating for the future, that collaboration and how we collaborate as a sector should be kept on the table.
Yeah. Why do you think they were collaborating better in the US?
They haven't got the Building Societies Act, I think, is one one sort of regulatory constraint that's there. So they're operating as banks. Although in saying that, I think that's slightly unfair because they're operating in various different levels of regulation,
Yeah.
as federal banks or mutual banks, credit unions, but the restraints are less, and I think probably there's more failing mutual banks given their smaller size, how geographically dispersed they are as an organization. But we did see one example of how collaboration through IT, through IP, people, risk, governance, all of those services that could be shared theoretically, were working, but the brands had been retained in those local communities. And that was working very well over there. So that was definitely something we thought as a model could work in the UK if implemented successfully in the future.
That's definitely one to look at, isn't it?